Hello everyone. Now today I'll be doing this O-level accounting paper. This is October-November 2021. This is the latest paper that is available right now. This is 770722. Now remember, in this paper you have to answer all the questions, and now starting off with question 1. So question 1 is stating that Aisha is a trader who maintains a full set of accounting records and prepare control accounts at the end of each month. So this is August 2021. They have given you a format for sales ledger and purchase ledger control account. So these are the two that we need to prepare. Now in the information that they have provided us on 1st August, they have given you sales ledger control account debit balance and the credit balance and many other details. So we have to prepare the sales ledger control account and purchase ledger control account. Control account is one of the very important topics in our O-level accounting syllabus, and this has been here for quite some time. Always remember that we need to clearly show and bring down the balance that we calculate at the end of the period. So there are marks for that, and you need to show that clearly. In simple words, we have to show the balance CD as balance BD. Now sales ledger control account debit balance is given to us and a credit balance is given to us. Always remember that on the opening date the debit balance and credit balance will come on the side on which they have stated. They have also mentioned the credit sales, and they have also mentioned the other items that are related to sales ledger control account, like receipts from customers, discount allowed. As we know, so they have mentioned discount allowed as 900, irrecoverable debt is given to us. So all these items that in any way are reducing the amount of credit sales, we will be recording that, and any item that is increasing the amount of credit sales, we will also record this. So there is also a contra entry. So contra is simple entry between sales ledger and purchase ledger. So highlighting these items will help us solve the question quickly. Now starting off, important to write the date, and we will first write the opening balances that are given to us on the opening date, that are like balance BD. There was a credit balance and a debit balance given to us. So balance BD on the debit side is simply 9800, and the credit balance that was given to us was 420. So on the credit side we will write balance BD as 420. Now remember that sales ledger control account will always show the credit sales on the debit side, and any amount that will be reducing the credit sales will be shown on the credit side. So the credit sales amount has been given to us, and this is 88,850. So while you're doing this, can be easy for you if you tick mark the items that you are writing down. So like credit sales has been given to us. This is amount 88,850. So 88,850. Now once I have recorded this amount, we'll look at the other values. So we have receipts from customers. This is the amount of money that we are receiving from the customer, so this will go on the credit side of the sales ledger control account. So we'll simply write bank and the amount that we received, which was 82100. So 82100 has already been paid to us by our credit customer. Moving on, we have discount allowed and bad debt written off. So discount allowed 900 will also go on the credit side. Again, we're writing these amounts on the credit side because these are actually reducing the amount of credit sales. That means that these amounts are no longer owed to us, and the bad debt is the irrecoverable debt, so obviously we're not getting this money back, so we'll also write this off, the amount of 300. Looking back at the question value, now we have sales returned. Again, now if the credit customer has returned some goods to us, so they should not be part of our payable, part of our receivables, so we'll just write returns again on the credit side, because any amount that is actually reducing the amount of credit sales will enter all of these on the credit side. So 2400 returns, and then the contra entry. So contra entry is the set off between purchase ledger and sales ledger. Contra entry happens when your buyer is also your supplier, so you're paying them money and they have to pay you some money, so we just set off some balance. So contra entry is 2920. Contra entry will also always appear on the credit side in your sales ledger control account. Now there is also interest charged to customer on overdue account. This amount is actually increasing the value for credit sales, so this will go on the debit side. So any interest that is charged on any overdue account, that is always recorded on the debit side. So this amount of 90. Now we will simply try to balance these off. But before that, when we look at the question, we see that they have given us a closing balance of sales ledger control account, which is a credit balance. Now this is a credit balance brought down. Always remember that the closing value for any credit balance or debit balance will always be shown on the opposite side, because that's where the difference will fall. So the credit balance will be shown on the debit side, as this is the difference. Now balance CD 350 goes on the debit side. Why is this happening? Because obviously a debit side CD balance will be carried down to become a credit balance, and the question simply states that this is a credit balance. So always remember, on the closing date in any sales ledger, purchase ledger, control account question, the closing date balance should be taken on the opposite side as a difference. Now when we total this credit side, this is adding up to 99090. We will write the same amount on the other side, 99090, and with this we will try to find the difference on the credit side. So on credit side, this is balance BD. So 99090 minus 2920 minus 2400 minus 300 minus 900 minus 82 100 and 420 will give us 10050. So this is our debit balance. Now this balance is coming on the credit side, and this will be brought down on the debit side. Again, when a sales ledger control account has balances on both the side, what this usually means, on a regular basis, the traditional balance should always be on the debit side, brought down on the debit side. So this larger amount, balance CD 10050, and that is the amount that is coming on the debit side. And because the question is stated that there was a credit balance, so we added that, and now we have to show down, bring down these balances. So always write down the next month. So balance CD on the credit side will go as a balance BD on the debit side, and we will write the same amount, 10050, and then our balance CD on the debit side, this is going as a balance BD on the credit side. So this is the balance that was actually given to us in the question. A credit balance on sales ledger control account simply means that the customer has probably overpaid us. A regular balance is mostly the balance on the debit side. You can also identify that with the larger value. Now the next part is purchase ledger control account. For purchase ledger control account, as we have tick marked the items that we have used, now we know the items that are left are the ones that we need to use, relevant items, along with that contra entry. So the opening balance for purchase ledger control account was given to us. Now let's just go back to the question. The opening balance is given to us as 7700. Now this opening balance is credit side balance. We will write down the date, so this is 1st August, and all the other entries will be coming on 31st August. So there is no need to write the date again and again. You can just give one heading and move on. So the payment, we have the amount for credit purchases. The amount for credit purchases is given to us. Payment to credit suppliers. Cash purchases are never a part of control accounts. Anything related to cash, like cash purchases or cash sales, are not included in control accounts. So we'll simply take our credit purchases value. Credit purchases are given to us as 55400. Now with this we have payment to credit suppliers and discount received, as these both values will be reducing our credit purchases amount, so these will go on the debit side. Any payments made to suppliers, so we simply write bank. The amount was 50600, and we had discounts. So whatever discount that we're receiving, that is also reducing the amount that we have to pay in terms of purchases. So the discount that were received were of 600. Again, this will also go on the debit side in the purchase ledger control account. There was a contra entry which we had noted down earlier, so the contra amount will go on the debit side. This was 2920. So contra is the set off between purchase ledger and sales ledger. So in sales ledger it was shown on the credit side, so in purchase ledger we are showing it on the debit side. Now there are any more entries, there is nothing more to it, so we will simply close down the account and write the total balances. So calculating the larger side, which is the credit side, so 7700 plus 55400 gives us 63100, and again on this side 63100. Now we simply find out the difference, so the balance CD will be 63100 minus all these three items above, so we get 8980. Now this balance CD will go down as a balance BD. We need to show that, as the question also clearly asked us to do so. So balance BD 8980. Now again, this balance BD is a credit balance, so purchase ledger control account closing date credit balance is 8980. Now this is how we make our sales ledger control account and purchase ledger control account. Now moving on with the next part of the question, we can see Name the book of prime entry which Aisha would use to obtain the following information when preparing her sales ledger control account. So this is a pure theoretical question. The items that are given to us are returns. Now we know that the book of prime entry that will record returns is basically returns are from sales return journal, and then the discount allowed. Okay, and they only mentioned returns when we are preparing sale ledger control account, so obviously we are talking about return inwards. Discount allowed always go in the cash book, and any interest charged to customer will go in the general journal. Any contra entry is also recorded in the general journal. So these are the books of prime entry. uh, Moving on, suggest two reasons why the sales ledger control account had a credit balance of 420 on 1st August. So sales ledger control account had a credit balance of 420 on 1st August because usually this should be a debit balance. Now the reasons that can be there are, firstly, uh, the credit customer might have when a credit customer so when a credit customer has paid in advance, that's one reason when they can have a credit balance, or when there is any sort of an overpayment. So when a customer has overpaid due to any reason, that will also show a credit balance on the sales ledger control account. So this completes our question 1, which was total for 20 marks.